the fundamental question that everybody's trying to answer is deceptively simple, which is, what if you put a technology in the world? I mean, even taking a step back, if you say, if I invest in this technology, which is a kind of proxy for saying it's in the world and it's going to be deployed and it's going to take off. So assume all those things.
So yeah, and I know it is controversial, and I think, we work a lot with endowments that have net zero portfolio commitments, and so they're trying to measure that across their whole portfolio, different sectors, and think about what are the scope 1 through 3 emissions for folks who aren't familiar with this part of carbon accounting. Scope 1 are the direct emissions of an entity. Scope 2 are the purchased or emissions associated with purchased energy, and the scope 3 are sort of the other indirect emissions.
No matter what, if you are making a forecast, it is a guess, and hopefully an informed guess, but it's a guess nonetheless. And so I think that's where a lot of the debate still has to go in terms of making sure that we can make informed decisions that appropriately move the needle towards impacting positively climate change versus getting caught up in the weeds and chasing false precision on things that are unknowable, frankly. And there's a gray area in between in which we operate.
This episode is brought to you by Impacts Asset Management and the Intentional Endowments Network's Endowment Impact Benchmark. This is the Future of Finance. Welcome to the Future of Finance podcast. I'm Georges Dyer, and today we have a fantastic episode for you. When you think about breakthrough climate technologies or innovative products and services designed to drive climate solutions, one big question comes to mind. How do you measure their real impact on greenhouse gas emissions? How do you figure out how many emissions that would otherwise have happened can actually be avoided? It's actually a tough question to answer, but an essential one, especially for investors who want to ensure that their dollars are driving real positive climate outcomes while backing companies that can thrive financially. My guests today, Gilman Callsen and Seth Sheldon from Rho Impact, specialize in helping startups, venture capitalists, and private equity investors answer exactly these types of questions. We dive into their groundbreaking tools for forecasting emissions reductions, why this work is critical for scaling climate solutions, and their vision for the future of finance. This conversation goes right to the heart of what the financial system needs to look like to solve climate change and tackle other sustainability challenges. So check it out. And as always, please subscribe or follow the podcast, leave a review, and share it with your friends. Enjoy the episode. Seth, Gilman, welcome to the podcast. Thanks so much for joining me today.
Thank you for having us.
Good. You both well? Everything good in the new year?
So far. We're very early still. We've got through one snowstorm already, so we're pushing forward.
Kids at home a lot of snow. So,
yeah, nice. Good. Well, thanks again for joining. I'd love to just kick off by having you just share a little bit with our listeners about Rho Impact's work and how it came about and what you all focus on.
Yeah, wonderful. Well, thank you for having us. We're excited, and it's great to have both of us here too, so you'll get a few different angles. I'm happy to jump in with a very quick overview of kind of how we got into this space and then turn it over to Seth for more on kind of his journey into this, which predates Rho Impact. So as a firm, we're actually a spin out from a former company called Rho AI, and we've been working with the Prime Coalition since about 2017, 2018 on emissions reduction potential. And that really was born out of their work in the space. And they had published a paper alongside NYSERDA back around that time. And that really caught our attention as a firm from the data and data science perspective at that time. And so we started kind of figuring out how we could play a role in the space as software engineers, as data scientists, as practitioners. And the first place that we started in was with the Crane tool, which is a free and open access tool supported by the Prime Coalition. We're developers on that and have been supporting it since then. We released that publicly in 2020. Mm-hmm. And then as a firm, we've been officially operating since the end of 2021 and really focused on how do you properly bring in emissions reduction potential, avoided emissions, and all this forecasting and modeling into the investment space to really direct capital to the most promising climate startups. That's kind of our core of what we are and what we're focused on.
Yeah, great. I definitely want to dive into all that more. Tell us what the Prime Coalition is for folks who don't know.
So the Prime Coalition is a really exciting organization because they blend quite a few different parts of capital and philanthropy. Mm-hmm. So they're based in Boston, and they have a number of different activities that they pursue. I'm not a spokesperson for them, so bear with me on how I describe that. But the way in which we engage with them is primarily through their philanthropic work and with something that they convene called Project Frame. And Project Frame is a pre-competitive space for investment professionals who are trying to understand how to forecast the impact of their investment decisions. And I think that's a really remarkable thing that the Prime Coalition has done among many other things that they do. But that's really the primary way in which we engage with them.
Yeah. And they're generally trying to drive investment towards climate solutions at a high level, right? They're a nonprofit. Is that right?
Yes.
Yeah.
And catalytic capital for climate. You got it.
Exactly. Nice. And so, so you were in the software space before and sort of saw the need and opportunity to really focus in on how your work, your expertise could help drive climate solutions.
You got it. And Seth, I'll pass it over to you because we actually met through the Crane tool. So that worked back in about 2018. And it's great because Seth's background, I'll pass it to you. Mine is much more on the entrepreneurial side and software engineering. Seth, you can take it for how you spun in.
Yeah, totally. So delighted to be here. Of course, always love to tell the story, and it's been so exciting to see the whole space evolve. I've been doing, I would say, sustainability analytics for about 15 years, a little longer than that if you count some projects in grad school. But in any event, my background's in environmental science. And I got really into what at the time was called the energy and water nexus, which was looking at all the kind of bidirectional interdependencies of these large systems, large resource systems that we rely on, and also impact. We weren't using the phrase, impact at the time. I was more concerned with ecosystem effects, as well as regulatory consequences of large scale energy generation, electricity generation in particular. That's how I got my start. But then I kind of fell headfirst into the startup world. As I was hired as a lowly sort of analyst who was eager and naive enough to try to solve sustainability with holistic metrics years ago. And that was just a fabulous experience. One, on the kind of professional side, getting close to the startup community, the entrepreneurial community, and then trying to figure out how to model these things. So fast forward a bunch, we saw this opportunity. At the time, I was working with a firm called Greenometry. We saw this opportunity to work with Prime Coalition and Rho AI to make the tool that was supposed to help and has been helping, I think, the investment decisions around the future, the way that technologies could impact our emissions profiles at the industry level, even at the facility level if we wanted. So, and that's, very difficult stuff, of course. And I think part of the reason that we're here today, it's very complex because it ends up bringing together all these different disciplines way outside of environmental science. Sometimes it's economics, sometimes it's, pure finance, sometimes it's engineering, all these crazy questions that we have to ask and answer just for emissions. So that's where I've been focusing my energy. I'm usually on the methodology side, usually on the kind of wonky science side, I would say. And I joke with my developer colleagues that I'm like just dangerous enough in Python to break things and to do some fun stuff. So it's been thrilling the last many years working with everybody at Rho AI and Rho Impact as part of that company to realize a lot of these goals. So anyway, quick background on me.
Yeah, nice. Well, let's dive into it. And so, Rho focuses on measuring the avoided emissions and forecasting that into the future, right? So as opposed to looking backwards, which a lot of other tools do or analysis does, it's sort of looking at how can this technology or this company, how much emissions could it potentially avoid over the lifespan of its work as these companies and technologies grow and scale. Did I pretty much get that right?
Yeah, absolutely.
Nice.
Yep. Let's to elaborate on that. It's a place that we spend a lot of time thinking about the distinction between those two categories.
Yeah. So talk a little bit about why that's different and important in terms of what you saw in the space and sort of what other tools do.
Yeah. So given our history in this, and we've been in this for a number of years now, really in earnest since about that 2017, 2018 time period, in the beginning, quite a bit of effort, actually, even on our team, has been spent on what's called emissions accounting.
Right.
And that is truly an accounting exercise. And so, for those who aren't familiar with it, you can think about it very similar to taxes, right? What you're looking at is what happened last year, or what happened last week, or yesterday. But it's always a retrospective activity. And there's a tremendous amount of value in that because you need to know where you've been to understand where you're going to go. It's a fundamental component of it. But the majority of that industry has really been kind of evolving and maturing, driven by regulatory and disclosure pressure. And so inherently, the majority of that industry is retrospective. So they're all looking at what has happened and how can I disclose and report that accurately and as accurately as possible. And what we identified, over the last several years is that there's definitely a gap in the utility of that activity as it relates to asking the question, what comes next? Or how does this technology compare to another potential technology that could scale in the world? What could that impact be? And that's a really important question for investors to be asking because they're the ones who are funding the next generation of climate tech. And the accounting data are important, but they actually are not as informative as you might hope that they would be for answering that question, especially for new technologies and new markets with new deployment characteristics that haven't been able to be even recorded yet.
Yeah. Yeah, you can see how it's useful if you're looking at a big company and you can see their emissions year over year and you look at the past 5-10 years and you say, okay, it's going down. They're on this trajectory. You can draw some conclusions from that. But yeah, if you got a startup company and new technology that doesn't have a background in history and is focused on reducing these emissions, yeah, you want to figure out or give some sense of what that's going to look like going forward. So how do you do that?
I'll pass this one to Seth.
Yeah, great question. So I could give you the sort of cheat sheet on the way that we think about it and the key kind of parameters that have been developed and discussed through, especially through Project Frame, but in lots of different settings. I was mentioning earlier how exciting it's been to see the field evolve. So many of these threads have been pulled on for several years now. You've got Project Frame, Mission Innovation. GFANS has been doing a ton of work in this. WBCSD. These are all acronyms that I'd be happy to spell out. WBCSD. I don't think I would get right on the first try.
World Business Council on Sustainable Development.
Yeah, that's it. GFANS too. So it's the fundamental question that everybody's trying to answer is deceptively simple, which is what if you put a technology in the world. I mean, even taking a step back, if you say, if I invest in this technology, which is a kind of proxy for saying it's in the world and it's going to be deployed and it's going to take off. So assume all those things. If you put a technology in the world, what's the effect that it's going to have beyond the four walls of the facility that it's been deployed in, or wherever the context of its deployment? We talk about it as an industry application, and you can get really detailed on this. There are lots of platforms out there and a much longer history of asking the question about process efficiencies and reducing inputs, reducing costs, all those. And that's a different sort of granularity. It takes different resources. It's quite expensive to do. And it's an important thing that we have to ask in all sorts of systems and industries and everything. But for us, we usually don't have the luxury of a ton of data to work with at the kind of granularity that we want to ask this question. So you have a widget, like as our stand-in term for a magical thing that's going to reduce emissions somehow. And ultimately, that widget is supposed to lead to a reduction at the atmospheric level somehow in the future of emissions relative to what would have occurred. And this is a really dicey point. It's controversial. As I'm sure we'll get to later, but this question about what are you comparing it to, and why are you comparing it to that? Those questions are important, but the simple kind of question is, what effect do we expect this technology to have at scale? There is a great line that a former director of ARPA-E out of the U.S. Department of Energy had, and she was the chair of our scientific advisory board with Crane way back in the day. Ellen Williams. And she asked this question, which has always stuck with me, which, if it works, will it matter? And that's really for all of these technologies, it's like why we make the investments. And so for us, the question of if it works informs really the question of how does it work? What's going to be reduced? What material energy savings are going to occur? How do we measure those things? And how do we zoom out if we're working with like bottom up data, at the level of the bench kind of, or top down if we're talking about industry level emissions? How do we connect those kind of dots? But it really just comes down to ultimately a comparison of the GHG intensity per unit of production of the new system with the technology deployed versus how it would have been without the technology. And that's the really devilish kind of comparison. It's like devilishly tricky comparison that we have to make with all these system dynamics and everything. But that's what everybody wants to know, because they want to know whether their dollars are going to something that's going to have the greatest effect. And where we spend a lot of our time is trying to understand what questions, what assumptions, what levers, what data points, what parameters are going to move the needle. Like, what do we have to ask in order to understand uncertainty in those systems and the scale, the magnitude of that effect? It's not always obvious, and it's usually not perfectly in line with the greatest kind of rosiest hopes for each of the technologies. So we try not to be wet blankets on this point, but we're trying to get to reality.
Yeah. So I want to get to sort of the diciness around comparing it to what would have otherwise happened. But maybe just to put a finer point on, like, can you give a specific example of a type of technology that you might look at and how you would go about making these estimates about its impact going forward?
Yeah, totally. Something that is kind of recently in mind. We've done a number of these analyses for one of our clients in the battery technology space, especially batteries for mobility. And primarily vehicles, the kind of passenger vehicles. But the technologies themselves, this is another interesting kind of dicey area where you can have the technology just existing in a vacuum, right? Sometimes they'll say like in outer space. It's not really doing anything, and there's no effect occurring. It's only when it's applied in a specific setting to do a specific thing. So if you've got a company and this is where some of the dissonance comes in, incidentally, where you have a company that's super focused on a specific breakthrough that they're trying to get through, like a new way of producing a cathode material for a lithium-ion battery. It gets that specific, sometimes even more. They're trying to develop a single reaction,
one component or something.
One individual component. So that's a space where we start. Where the first question we have to ask, I think, ultimately is like, how do we contextualize the use of that material in the world to give something that we actually care about? Like most of us, very directly. If I were to ask, random person kind of on the street about cathode materials and lithium-ion batteries and everything, they'd be like, that's irrelevant to my life. If I turn around and say, how did you get to work today? That is highly relevant. That's transportation. And there are all those kinds of things. There are ways of measuring that kind of service to society. You might say passenger vehicle miles or something like that.
Right.
That are the good thing that we all want. And the bad thing that we're trying to reduce is unnecessary energy use, unnecessary emissions as a result of getting us to work, right?
Right.
And so it's drawing that map, connecting those dots, which is really a narrative, I would say. It's like before we do anything quantitative, even bother with any of the quantitative stuff, we have to get the qualitative elements of it pinned down. And then from there, we can say, okay, you've improved this anode material or cathode material, whatever it is. How is that going to cascade to an overall improvement or reduction in the emissions for getting you to work? And critically, what would you have to assume for large scale impact to occur? Yeah. So
I love that. I love that idea and the connecting it to like the purpose of the business or the purpose or function of the end result, because I think, we get captured in that a lot with sustainability, where it's like, what are we doing some of these things for in the first place? Are these companies, are these businesses adding value to society in the process? They're having all these impacts, using all these materials, using all this energy. But at the end of the day, what sort of human need is being met or fulfilled through this process? And so I love that you connect it all the way back to that.
Yeah. And that's a key theme that we use in our work kind of broadly, both in the tool that I referenced earlier, Crane. We have another product called Koi. And the way that we think about these systems is as a value chain. And so there are key material inputs and key life cycle phases or things that happen that are easily describable in the world. And there are things that are upstream of the innovation
Right.
and things that are downstream of the innovation. And that contextualization is so critical because, especially in the climate investment space, as you hear Seth talk, you can, I'm sure, pick up that a lot of this becomes very detailed very quickly, quite esoteric often. But at the end of the day, traditional finance still needs to play a role. Traditional people using and scaling and purchasing these products play a role. So if they're going to have an impact, they're going to scale. And what does scale mean? It means that they're deployed in the world and they're used for something. And so really getting to that kind of grounding the narrative for all parties involved is actually a big part of our work, making it so that we can get down to that granular esoteric level because you need to. But to start the conversation and to be able to speak with an investor and the chief scientific officer of the company and a customer, you have to have a level setting narrative that everyone can nod their head at and say, yes, I understand that for this to have an impact, we're getting more people to work who are driving more miles, to use Seth's example, or using this product in this way. Okay, I understand that. And then you dive more deeply.
And there's a life cycle element to that, I think, as you just said, right? So if this product might have some downstream emissions reductions, but if the process of building it has a ton of upstream added emissions,
that's right.
You're looking at that whole cycle.
That's right.
Yeah, nice.
There was a while on that point, George. Just really quickly, there was a while in the literature, and certainly in the common, more common understanding of these systems, where lithium-ion battery-powered cars were just categorically good because nobody was looking. They were making two really big assumptions when doing that. One, that the additional battery pack didn't really matter. That was a bad assumption, and it's matters hugely. And two, that they were all being charged off of photons from the sun, right? Those are not good. It's they're not good assumptions, and that's just one tangible example where we have all kinds of things that we use all the time, and we bake in these assumptions, especially when we're trying to sell electric cars. So that's and that's just one of many.
Yeah. This episode is made possible by Impacts Asset Management. Founded in 1998, Impacts is a specialist asset manager investing in the opportunities arising from the transition to a more sustainable global economy. Impacts offers a well-rounded suite of investment solutions spanning multiple asset classes, including equities, fixed income, and private markets, seeking strong, risk-adjusted returns over the medium to long term. For more information, visit impactsam.com. That's IMPAXAM.com. This episode of the Future of Finance podcast is brought to you by the Intentional Endowments Network and our new Endowment Impact Benchmark, which is an exciting new initiative helping endowments and foundations measure their progress on sustainable investing. Participants receive expert feedback, the ability to benchmark against peers, and earn recognition for their leadership. If you're at an endowment or foundation that is ready to advance its sustainable investing strategy, or if you want to benchmark your progress against the field, or if you're looking for a credible way to show your stakeholders that you're taking these issues seriously, learn more and join the 2025 cohort at endowmentimpactbenchmark.org. Well, let's touch on that a little bit. I want to come back to that whole idea of the avoided emissions and how do you compare it against a future scenario that doesn't happen because this new innovation is in the world. So yeah, and I know it is controversial, and I think we work a lot with endowments that have net zero portfolio commitments, and so they're trying to measure that across their whole portfolio, different sectors, and think about what are the scope 1 through 3 emissions for folks who aren't familiar with this part of carbon accounting. Scope 1 are the direct emissions of an entity. Scope 2 are the purchased or emissions associated with purchased energy, and the scope 3 are sort of the other indirect emissions.
Everything else.
Yeah.
Everything else.
And this sort of idea of avoided emissions going forward is sometimes referred to as scope 4. Correct? Is that how you all think about it?
This
Yeah,
is very much still in debate.
Yes. I was gonna say,
It
What are
is.
your
It's
thoughts on that whole debate and the concept of a scope 4 emission? And just, I guess, the whole framework of carbon accounting that we've been using so far.
Seth, I'll let you take this one. I think it's a fun topic. My very short answer before I pass it to Seth is simply that terms matter greatly, and there is still work to be done to ensure that we're all speaking the same language. So that when we say scope 4, or we say avoided emissions, or we say emissions reduction potential, the counterparty understands what we're speaking about. And this is definitely, it's an incredible amount of work that's going on globally, because it matters that people in the US and Europe and Asia, we can all speak the same language and understand what we're talking about. So work to be done.
Yeah, great point. And I don't want to take us down too deep a rabbit hole, because I know this can go that way. But Seth, love your quick thoughts, and then we'll move on.
Yeah, quick thoughts on this one. I feel like part of the uncomfortable kind of growing pains in this setting right now of like new modes of inquiry and new technologies to even measure and think about these things. I mean, it's insane how many platforms are out there now, and like how many people talk about life cycle analysis or carbon footprinting who didn't 5 years ago. I mean, even the amount of investment going just into that, which is super meta. I mean, it's just like, how do you measure these things and think about them is amazing. I don't think that the terms will settle out. The things that don't change are the set of things that we need to measure and verify and see. I mean, to use shorthand, I would say it's the science behind it, and that's where we don't want to accidentally kind of whiff on the communication, the science communication. If people generally, if their stomachs turn at a certain way of describing it, or they instantaneously don't understand it, maybe it's worth reevaluating it. That's a lot of work actually that's gone into Project Frame, is through discussion, through consensus, through teasing out these things and like what preconceived notions people already have, or understanding of certain terms, trying to reduce that confusion, make things intuitive. I mean, that's really that's a distinct challenge from the actual measurement and management.
Right. Yeah, I think you're right. A lot of this is about communications. I think a lot of it comes back to companies or organizations or investors wanting to make claims too, and then how do you measure that, and what claims are. And so that's one thing. But I think the more important thing is, how are we going to solve the climate crisis and move to a low carbon economy? And so, don't want to get too hung up in those weeds, although it is important, obviously, to figure out how to measure and communicate these ideas.
Critically important, and I'll just without going down it, but just to add another concept is precision. And I think that the question of precision is an important one here, because a lot of time is spent chasing false precision, in our view, frequently. And in particular for forward-looking claims, there is a wide band of acceptable precision because it's all a guess.
Right.
No matter what. If you are making a forecast, it is a guess, and hopefully an informed guess, but it's a guess nonetheless. And so I think that that's where a lot of the debate still has to go, in terms of making sure that we can make informed decisions that appropriately move the needle towards impacting positively climate change, versus getting caught up in the weeds and chasing false precision on things that are unknowable, frankly.
Yeah, exactly.
And there's a gray area in between in which we operate.
Yeah. So to that point, let's move on. And I'd love to just have you all explain a little bit more. You mentioned COI, which is a tool of Rho, and Crane. And just, again, at least at a high level, kind of explain what both of those do, how they relate, and how they enable your work.
Yeah, great. So Crane is free and open access, and it's provided by the Prime Coalition and Rho Impact. It is now fully in alignment with the latest guidance out of Project Frame. And our collective goal there is to remove the barrier for even the earliest stage startups to begin to understand what the potential impact is of their innovation, communicate that both for themselves, for the purpose of seeking investment, and hopefully also for the purpose of sales, right? So that they can actually scale a new climate solution. So truly encourage everyone to look at that. It's at cranetool.org. And as I said, it's free and open access, and the Prime Coalition has wonderful support services around that as well to help people learn how to use the tool if that's of interest to them. Then on the other side is Koi, and that is in some ways similar, but really think about it like the enterprise next step. So that has a lot of additional tooling and data more focused on professional investors and later stage startups. But it's all about forecasting the avoided emissions and emissions reduction potential of new technologies as they scale, and facilitates exactly what we've been talking about. How do you compare the potential impact of a new in vitro beef technology from a solar photovoltaic from a mass timber? These are wildly different technologies deployed in completely different markets with very different dynamics. And yet an investor is going to be faced with all three of them in front of them and asking the question, which one has the greatest potential for impact if it's successful? Right. And that's what we're helping answer.
Got it. Love it. And on the Crane tool, I mean, you talked a little bit about sort of who uses these tools, the companies themselves, investors that might want to know the impact of what this company or technology could do. But if a user, say I'm in an endowment office, I'm an investment analyst, and we're looking at our climate impact, I go to the Crane tool, I can just put in a company, a startup company that I've talked to or that one of my investment managers mentioned, and see that potential impact.
In the case of Koi, yes. Crane is a little bit more bring your own data and effort on purpose. But yes, the idea is the same. I think the distinction that I'll call out here, which is a really important one, is if we look at the climate capital stack from our vantage point, we have three distinct layers of it. At the very base of that are the climate startups themselves. And those can be innovations coming out of anything, big companies, small companies, startup, you name it. But it's a new innovation in the world that needs to scale to make an impact. Then in the middle, you have the actual managers or investors who are deploying capital, investing, making investments.
Yep.
And then above that are the asset allocators or owners, or otherwise known as LPs, limited partners. Frequently, those are the endowments. And the endowments are sometimes making direct investments into the technologies themselves. But actually, more commonly, what they're doing is looking at a number of different investment managers in different asset classes like venture, private equity, growth equity, public markets. And they're making the decisions of where to allocate their big endowment capital to serve a lot of different needs, right? It's the financial stability and returns. It's also the needs of the institution that they serve, both for today's students and tomorrow's students. And as they're looking through that, increasingly, they also have objectives around net zero commitments, as you called out earlier. And that's the great work that you all do. And if you look at the endowment layer, which I kind of will abstract to asset owners,
right?
They have a really interesting problem because they're not actually looking at the individual technology most frequently. Right. As I mentioned, they're looking at the managers who are looking at the technologies. And today's world is such that the best storyteller wins. And that's problematic. It's problematic for the climate, if nothing else. And what we're trying to do is cut through that noise and say, yes, just without hearing your narrative of it, who are you investing in? And from that information, we can actually glean quite a bit about the potential impact of one investor's portfolio versus another's, and the investment decisions of the aggregate amount of the portfolio of the endowment. And so where we really are striving is kind of enabling everyone within that capital stack to sing off of the same sheet of music.
Right.
So we no longer have these kind of in-house trade secret ways of evaluating what the potential impact is. We actually completely disagree with that approach. We think that full transparency is paramount, in particular when you're forecasting, because again, it's all a guess. So what do you have to do? You have to consistently apply a methodology, which just means consistently apply the same way of making that guess. And you have to be transparent in which assumptions you're making. And that's the best you can do. And if you can do that, then all of a sudden, both the new technologies, the investment managers, and the asset allocators can actually understand in the same way what the potential for impact is. And they can debate at the level that they should, right? They can debate, going back to Seth's earlier point, an actual discussion that makes sense and is not esoteric, right? Is this technology going to let millions of people get to work faster, better, stronger, or not. Not is this very specific cathode technology and molecular science, which very few people can actually debate meaningfully.
Right.
You can actually put it at a level that everyone within, around the table can talk coherently. And that's one of our goals as well.
Yeah. Love it. And just curious, out of curiosity, in that capital stack, you mentioned the investment managers, as these are all, or generally early stage companies or technologies. And as you said, that could be a startup or it could be an innovation out of a bigger company. But are those managers that are using this typically earlier stage venture capital funds that are looking at these startups for the most part? Or do you have other types of investment managers in different asset classes using it?
I'm really excited about the trend, but keep in mind, we're a small company ourselves. So everything that we say is kind of through this limited purview that we have. And we've really focused on smaller private companies as the kind of starting point for our technology and approach, which means that we tend to engage with those who invest in those companies, which tend to be venture capital, moving into private equity. I am excited that it's moving into private equity, growth equity, public markets over time. There are additional complexities there. Again, happy to get into the details there, but from who we serve today, it tends to be private investors in earlier stage technologies. But the approaches that we take are absolutely applicable well beyond that.
Excellent. Excellent. Well, I am amazed our time is flying by here, but a couple of kind of wrap up questions. This is the Future of Finance podcast. And so would love to hear, given all of this and your perspectives, what do you guys think is the future of finance and where this is heading?
The future of finance, I genuinely hope, I don't know that I would make a prediction of this, but I hope that externalities are actually built into our financial system. I think that's a tremendous failing that we have overall, which is many, many, many decisions can be made, and the knock-on effects of that decision are not priced in appropriately. And by that, I mean, you can invest in something that makes you a lot of money next month, even if next year it's adding a huge debt to global society through emissions or waste or any other of these knock-on effects. And I hope that this kind of wave of new engagement with climate science and the very clear effects of it right now, fires raging in LA. I mean, these are not isolated incidents and they're no longer kind of one-off once a year. People are beginning to finally appreciate how very severe this is. I hope that these are really applicable ways of thinking about the world that properly price this stuff.
Yeah, I'm really glad you brought that up because it's been top of mind. We're recording this, as Gilman said, as the fires are raging in LA. But we've seen so many climate impacts and the costs of those just skyrocketing year after year, stressing insurance companies and the whole insurance industry. And people say fossil fuels and the energy is a great arbitrage in the sense that, a lot of stored energy can get a lot of productivity, and that's been true for many years. But there are additional real costs that we're now realizing, and that needs to be factored into the equation if we're going to be looking at it, realistically. Seth, how about you?
Yeah, I would say similarly in kind of environmental economics 101, there's maybe not the first day, but certainly in the first week, this point about externalities comes up. It's like, what is pollution? And what we see inevitably is that if you try to manage it, the moment you internalize it, say you're a coal-fired power plant, everybody's happy in the early days of coal power generation, or nearly everybody, because they're getting their lights on far from the plant. Sometimes it might be close, in which case they have internalized more of the effects, but that's a side
Internet
point.
phrase.
Yep.
Seth, you just froze up there for a sec. If you just want to restart that answer.
Yeah, absolutely. So
team it together.
I would say, think about where to start. It's a great question in terms of engagement. Environmental externalities generally, as a concept that can inform a fairer, more verdant, more just society and future. That's a great place to start, because those externalities like pollution, environmental justice, these kind of consequences can be quantified. They can be counted and accounted for. And it takes creativity sometimes to understand them, because in many instances in conventional systems, they are not. Sometimes by design, usually not by design, just because they sit just outside of our field of vision. And inevitably, when you do internalize those things, the cost goes up. So environmental control measures, for instance, at a coal-fired power plant, increase. It's why people grumble about it if they're not immediately next to the coal plant. Price goes up because you have to install new systems. And that's true in a lot of spaces, but you see the knock-on effects, the positive effects of that are enjoyed by all of us, including having a stabilized climate. So,
yeah, and it's hard for people to connect those dots. That the pollution from that coal plant. What are the costs of the healthcare system as a lot of people get sick, and who's paying for that as that healthcare system gets stressed?
Exactly.
Taxpayers, insurance premiums, et cetera. So those costs do get realized. So yeah, no, I'm really glad. I think you guys really got to the heart of it there with what the future of finance needs to be. And on a related note, the future of finance is also the young people coming out of schools and getting into this industry. Any advice you'd have for them in terms of, folks that might want to pursue careers similar to where you are?
I would just say you can do it. It's like anything. I mean, there are so many ways to engage in this work. And we've had a lot of conversations recently, including at New York Climate Week, where I had, a lot of really inspiring conversations and heard a lot of inspiring people speak. And one of the core messages that I took away from that is everyone has a role to play. And in fact, those who frequently feel the furthest from this work are often the most directly responsible and able to help. So if you look at people who are operating machinery, they may not be the ones who designed the product. They may not be the ones who invested in the company who scaled this thing, which is all the words that we've been using during this conversation. But they're the ones who are closest to the machinery and understand the operating conditions and the parameters that they're operating efficiently or not, and how they can be improved. Thinking in terms of efficiency is something that we can all begin to do, and that makes a big impact. So I think no matter what your interest is, whether it be at kind of the bench science level or the finance level or the operational level, thinking critically about how it impacts your life and the climate can and should be part of how you think about your career growth and trajectory. And you can play a very meaningful role no matter where you sit.
That's a great point. Yeah, every job's a climate or sustainability job if you look at it through that lens. Yeah. Seth, how about you?
I guess just riffing on that a little bit, I would say, especially while you're in school, and then especially once you graduate, it's important to stay curious and stay cynical in the right ways, or I should say not cynical, stay skeptical, right? And that kind of curiosity can go a really, really long way. But I think in this sort of in these troubled times, staying optimistic, being optimistic is a superpower. It's so easy to be cynical and to go in and then to start, whether you realize it or not, making decisions on a day-to-day that are driven by that kind of cynicism. We see it all the time around us, even in the kind of impact space, because it's really hard to do this stuff. And there are all these crazy incentives, perverse incentives, all these kind of wild kinds of activities that may not lead to the future we want to live in. So I think staying optimistic, being optimistic, and then translating that into your whatever field of inquiry you get into. But I think the earlier point about it, every job is a climate job. It's because we have a climate in the future, and we have a future. So I think that's absolutely true.
That's a great point. I mean, it is challenging. It can be daunting, but the flip side is there's just so much opportunity to create a better world, better society, better business models, exciting innovations. I mean, look at it through the right lens. This is motivating. And I would add actually one more kind of call to action just based on what you both are saying, which is, in terms of the externality conversation and how to really measure the impacts of this for students and people that are in school right now and interested in business and finance. That's where a lot of this thinking and the frameworks come from, so put pressure on your professors, ask those questions. Why are these costs not accounted for properly? How do we get that into the business school curriculums and then that translates out into the real world. So
I love that. And if you can cut this, but that point is so interesting to me. I speak about this with my wife quite a bit, actually, and how as we've gotten older, we look back and realize that at the time that we were in school and you're getting taught by truly incredible people often, you just assume that the world is that way. And that therefore the reason why it is the way that it is because it's always been that way and it always will be that way. And as you kind of go through life, I think it becomes very clear that that is not true. Number one, it's not always been that way. These are always evolving. And it does not always need to be that way. And so, kind of following all those lines that you said and Seth said, I think stay curious and also look for opportunities to ask the right questions of the people who are teaching you so that you can more thoroughly understand where did that come from and are there ways that we can improve it?
Yeah, absolutely. I love it. Well, Seth, Gilman, thank you both again so much for joining me and for all the great work you're doing. Looking forward to staying in touch and hopefully we'll have you back on again before too long.
Awesome.
Likewise.
Thank you.
Thank you for IEN and all of your work.
You bet. All right. Take care.
All right.
Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.